Senator Warren.
Thank you, Mr. Chairman. Thank you, Dr. Yellen. You know, there's been a lot of talk today about the Fed's use of quantitative easing to try to help the economy get back on its feet. But the truth is, if the regulators had done their jobs and reined in the banks, we wouldn't need to be talking about quantitative easing because we could have avoided the 2008 crisis altogether. So I want to focus on the Fed's regulatory and supervisory responsibilities to keep the big banks in check. Now, I'm concerned that those responsibilities just aren't a top priority for the Board of Governors. Earlier this year, the Fed and the OCC reached a settlement with 13 mortgage servicers that had engaged in a long list of illegal foreclosure activities. And the settlement was for over $9 billion. It directly affected more than 4 million families. But the Fed's Board of Governors never voted on whether to accept the settlement. Instead, this decision was just left to the staff. Now, the Fed has smart, hardworking staff, but the Board of Governors would never delegate critical monetary policy to them. And yet, even now, after the biggest financial crisis in generations, the board seems all too willing to delegate critical regulatory and supervisory decisions. So I think we need to make reining in the banks a top priority for the board. So I know the board meets regularly to discuss monetary policy. Do you think the board should have regular meetings on supervisory and regulatory issues as well, making it clear that both of those are important to the Fed?
Well, Senator, I absolutely believe that our supervisory responsibilities are critical and they're just as important as monetary policy, and we need to take them just as seriously and devote just as much time and attention to them as we do to monetary policy. The board operates under a variety of restrictions. You may know about the government in the sunshine rule. And so when you suggest that the board meet to discuss regulatory matters, our ability to do so outside of open meetings is very limited. And so we tend to handle those by meeting individually with staff or meeting in small groups. We have a committee system where committees are put in charge of managing particular areas and making recommendations to the board. I remember in the 1990s that the board did regularly meet to discuss supervisory issues because there's confidential supervisory information, and it's easier for us to have a meeting, and I did consider those very valuable, and so I think that's a very worthwhile idea. I should just say, when there are delegations to staff and the Board of Governors doesn't vote, that doesn't mean that board members aren't consulted, and maybe those with expertise may have played a critical role and had very important input, even when there is no formal vote by the Board of Governors.
Fair enough, but I think it is an important signal here, and I'm glad to hear that you're thinking about this and thinking about the question of the appropriate delegation to staff and when it's appropriate to delegate to staff. Could I ask you just to say something briefly about that, about when it is appropriate to delegate to staff and when you have to retain for the board itself? Just very briefly, if you could, because I want to get on to one other question.
So I believe there are certain matters that under law the board must vote on, supervisory findings, mergers, and so forth. Rule changes. Typically, we delegate enforcement matters to the staff in the area of supervision.
And I'm glad to hear, though, that you want to continue to think about that, particularly when we're talking about something this important.
Yes.
I want to ask you one other fundamental question here, and that is, do you think that the Fed's lack of attention to regulatory and supervisory responsibilities helped lead to the crash of 2008?
You know, I think in the aftermath of the crisis, we've gone back and tried to look carefully at what we should have done differently, and there have been important lessons learned. We have massively revamped our supervision, particularly of the largest institutions, which we now organize through a process called the LISC, where we're simultaneously reviewing all of the largest institutions simultaneously, and the Federal Reserve System works jointly on these reviews. We no longer delegate to individual reserve banks the supervision of, say, one or two of these large institutions. It's also become an interdisciplinary matter, and that economists and lawyers and others are involved in. So we've learned a lot there about supervision. I would say one of our top priorities now is ramping up our monitoring of the financial system as a whole to detect financial stability risks. I think that's something that we weren't doing in an adequate basis before the crisis, and so we missed some of the important linkages whereby problems in mortgages would rebound through the financial system.
Thank you very much. Thank you, Mr. Chairman. I just want to say, Dr. Yellen, when you're confirmed, and I very much hope you are confirmed, that I'm very glad to hear you will make it a top priority for the Federal Reserve to engage in the supervisory and regulatory responsibilities that help keep our financial system safe. And that cannot be something that is merely an afterthought, but has to be a primary effort on your part.
Thank you, Senator. I completely agree with that.
Good. Thank you.